Welcome everybody. We are starting the live broadcast right now. Welcome. My name is Smart Investor. Welcome to the live broadcast. Hope you guys are doing good. Let's wait for people to join. As you can see, the title of our presentation is very much straightforward. Understanding different asset classes. We've already spoke on asset classes at length in passing, but maybe right now we just need to understand them more. So there you go. We're understanding different asset classes. We've got many asset classes. The most common ones being stocks. The other ones being bonds. The other ones being ETFs. In ETFs. The other ones also being real estate rates, and many other ones. Okay. So we're just going to talk about those in length. Um, so different asset classes. If there's any another one that I left out, please tell me. Okay, please tell me if there's one that I've left out. Please let's be active in the chat. Let's also make sure that if you're new here, you just want to learn about investment on a surface level, to just get a grasp or an understanding of how investment works or what is involved. Please make sure that you hit us with the sub, hit the like button as well, and stay if you want to stay for the live broadcast. So there you go, understanding different asset classes. A prudent investor. Okay, you gotta be a prudent investor. Okay, let me go to the next slide. Did we set this up correctly? Yeah. Okay, there you go. Okay, so you can see that one there. We have stock market, securities market overview. So we've got our market regulator there. It's SERBI, is the market regulator at the top there. We also have, then we've got stocks and commodities down there, derivative exchanges, depositories where we keep our assets. These are called depositories. We also have other intermediaries. We did speak on intermediaries and players in the industry when we spoke about brokers. We also spoke about traders. We spoke about investors, and we also spoke about market makers. And then we also have the NSE. These are now your stock exchanges, right? Your New York Stock Exchanges, the BSE. Anything with an SE definitely means a stock exchange, okay? And then we've also got those other players as well. So you can see that it is a very big network with a lot of players. So this is just the general overview, okay, in this example. So I hope let's move forward and let's see what else we have. So these are just the players. And also this is a concept that we also spoke about like 3 weeks ago. We're talking about the different account types. We did mention that if you're an investor, you want to start buying stocks or other securities, then you must have a brokerage account. But here you can see there's much more details. These are just accounts that are required. A normal bank account, your trading or broking account or a brokerage account, and we also have got the DMAT account. Okay, so many DPs offer a 3-in-1 account. Okay, offer a 3-in-1 account opening facility, which gives you the convenience of opening a trading account, a trading DMAT, and a bank account. Okay, all together. Now, some DPs are now offering online DMAT accounts. Okay, account trading required only if you want to buy, sell shares through stock exchanges. Okay, so these are the accounts. So when you start to invest, what we call securities are equities. Securities just means your bonds, it means your stocks, it means the different asset classes, okay, things you can invest in are what we call what securities. Again, this is what we call securities. In case some of you guys are wondering what securities are, we did spoke at length about them a few weeks ago. If you're just joining us, you can go check out the other live broadcast we've done before, and you can find out more about what we spoke about. Okay, and there we go. So we did take from the Delhi one. It was what established in 1996, first depository. You can see the country there, one of the largest depositories in the world, wide network of deposits there. So I'm using this case um, that I'm familiar with, this example, this case study. Okay, the source is in India. You can just check it out there. If you need more, I will put it in the description. One of the world's largest depository, okay, established in 1996, wide network of depositories across the country. Okay, there we go as well. So this is just generally the progress of the company. There you can go December 2010. You can really see that the metrics, you can see the growth has been exponential and it has been great. You can see like in December 2010, the market cap was 67.56, and then it jumped to December of 2015. This is 5 years later. You can see the cap is at 119.30, and then you jump another 5 years, then you can see that it's jumped to 225.5. So you can see that in the space of 10 years, according to the graphic, there's just been consistent growth. And then the last recorded one was in 2021 of September. So total value of all assets held are in this account. So you can really see that over time, there's been a lot of progress concerning this asset class. Okay, so this is definitely something you want to invest in. So there we go. Also, bank deposits and NSDL custody value. This is another graphic as well. You do have your y-axis and your x-axis, and you can see the recording begins from March 31, 2017 to March 31, 2021. So it's a space of 4 years. Okay. So you can see the aggregate bank deposits of all scheduled banks. It's the blue one, and also DMAT custody value in cash. This is self-explanatory, okay? Then we also have a GDP, not GPT, GDP graphic there. You can see the GBT and the NDSL custody value, they're kind of going hand in hand. They're almost close. If you look at the 2016 to 2017 year, the graphic is kind of close. And then 2017, 2018, they're kind of on the same level. So the disparity isn't that much. There's not that sharp disparity according to the graphic. If you want to find out more, there is a GDP source. We did include a website there that you can go and check out. Okay, so these are just graphics, and a lot of times I just put graphics to further explain. I know if it's new people, they might not understand, okay? But we did talk about what we want to talk about, the depository system and how we deposit our asset classes. So there you can go there. Okay, we've got a lot of players. So we've got depository number one, stockbroker and trading member, and and there's an investor who's obviously investing in that. And also we've got depository number two with investor number two. This one is set for, okay, let me my thing is blocking. Let me see if yeah. Okay, let me try to do something like that. Okay. Okay, stockbroker clearing member number 2. So you can see it's a flow chart, and then we've got what the clearing corporation, New York Stock Exchange Clearing Limited, and the Indian Clearing Corporation. They work together, and the issuer company, or the RTA. Then we offer that as again. Sorry guys, my PPT has a lot of information and my face is getting in the way of that, so I'm just trying to see if I can solve that, or let me try to minimize it. Okay, I found a solution. Okay, let me just do that. I hope you guys can see that. So we're going to talk about the services offered by depository participants. Okay, so account opening. Remember, if you're going to trade in any amount of stocks, you're going to start to open an account. Okay, so these are some of the services that they offer you. So we have account opening, normal bank account, brokerage account. This is where most of your trading for your stocks or your securities is going to happen. Okay, changing in account details. Yes, over time there are details that are going to change. Maybe you want to change it for something else. For example, probably your account is for just stocks. Okay, you just have this account for stocks, but maybe you don't want to open an account for other bonds, or you don't want to open an account maybe for bonds and for other securities, but maybe you just want to keep on using one account, but it needs to be altered because when it started out, probably it was just an account that trades in what? That trades in that is specific to stocks. So changing of account details, yes, it will what? They will have to change the details that now probably it's now for bonds. And also probably you might this account you might pass it on to someone like a family member. So all these details have to be sorted out. So these are some of the services that the depository participant offer you. Okay, account freeze, also something like that. Your account freeze. Give me a second. Where are we? Yep. So there we go. So account freeze to lock an account. Okay, to freeze an account in the event that maybe security concerns, maybe you're under investigation, or there just happens to be a breach that happens. So an account, your depository participant, they can freeze their account to lock out everybody, even including you, for a specific period. Okay, and you can also pledge and margin pledge of securities, transfer of securities. This is basically trading, transfer trading, like you when you do trading, you're basically transferring what securities you're transferring securities to another account is giving you money. This is basically at the stock exchange. Okay, so these are transfers. Okay, or maybe you're swapping stocks for stocks. Okay, you are an investor, you are a buyer, and somebody is a seller. Okay, but probably this time you're not going to exchange securities for money. Probably you want to exchange securities for securities. So that's transfer of securities. That's also another service. Maybe you are transferring stocks and the other person is giving you bonds. Okay, and then we also got those mutual funds. So there we go. Even unlisted shares can be dematerialized. Okay, transfer of securities held in physical form is not allowed, but the regulation has been changed. So let's look at the other one. Really, this is just a breakdown of some of the stuff. We really need to go on to the slide number 11. This is where, because the previous slide is just history. Okay, it's just history. We really want to go to slide number 11. Okay, let's go there. Okay, so be a prudent investor. So this is slide number 11. Okay. Okay, let's begin at slide 10 though. Let's begin at slide 10. Okay, there we go. Make sure that if you're here in the live broadcast, guys, you want to follow. Okay, you follow and you stay and tell us what you are looking for. You want some tips, you want some hacks, you want to know more about investment, please make sure that you follow. Okay, you make sure that you follow the account. Okay, so there you go. NDL's investor centric e-services. Okay, these are other services as well. You can see we've got ideas, we've got Speed E, we have NSDL Speed mobile app. Or these are just other services like the previous ones that we spoke about. Okay, so these are services that are open or that are available for investors. Okay, you can see a lot of them are electronic. Okay, so view transactions, holdings, along with valuation. Subscribe to CAS, update email ID for CAS, view and download 12 past CAS, participate in e-voting. Remember, so this is definitely for what? For your stocks, because if you are a stockholder, you will have to vote. So this is what this electronic ideas gives you. It gives you all these these benefits. You do not have to vote physically. You can just vote it on this platform. Okay, and then NDSL Speed mobile app. Everything is switched to technology, our mobile phones and our computers. So basically, this is just a rundown of the benefits or what the account will also furthermore give you. Okay, so you can really see there, and we actually have a link where you can find out more about that. Okay, let's move on to, okay, keep record of documents signed. This is what also your account will do for you. Keep records of documents signed, account statements, contract notes, received and payments made. You have to, if you're an investor, if you're a trader, information is important. Okay, information is important. Any contracts, any trades that go down, they have to be recorded. Okay, each and every one of them, they have to be documented, they have to be kept. You have to know where you are. An investor spends time reading and knowing more about their investments. Okay, save important emails and take periodic backup of data. So those are important things. This is widely known. Doesn't matter if you're investment or you are an ordinary person. Keeping important information and backing up your data is something that people are just supposed to regularly do. But now with investment, it's more important to have those save that information for your, what we call, your history or your track record. Okay, your track record, your investor, you have to keep all those things because they are relevant 10 years 15 years into your investment journey. So that is part of your track record. Okay, if you're going to sell an investment to someone else, once probably your investment has appreciated in value, then definitely somebody needs to know where the investment is going or where the investment is coming from. If someone is going to take over it, or it might be a stranger, it might be a family member. Okay, change password of your online accounts frequently. This is really important. Never show OTP and PIN with anyone. That is self-explanatory. Read SMS, emails, letters, statements, bills sent by your broker, bank, DP, and also NSDL. These are sent to you to keep you updated. So so investment in a way is not a walk in the park. Okay, investment requires due diligence. You have to be diligent. You have to be somebody who loves to read. You have to be somebody who is checks their email frequently, like I do. I check my email almost every day. Statements are going to be sent to you because you are a part of a business. So if you're a part of a business, you're gonna have to receive all these statements, all these bills, all this information. You got to be ready. Okay, so investment is a journey. There is the money part and the dividend part and the growth part of your stocks or whatever asset class you've invested in. But there's also a lot of documentation that is involved that you should be ready to deal with when you decide to be an investor. Okay, and all this other stuff. Okay, so this is just for investment. um, okay, we are here. This is the slide I've been talking about. I hope you guys can really see it. All of it is a bit small. Let me try to make it longer because my face will block it. Let me try to make my face smaller though. Okay, yeah. Let me make my face smaller, and then let's make the slide bigger for you guys to see it. Wow, my face is so tiny there. Yeah, let's make the slide a lot larger so that you guys can see. Yeah, now it's clear. Now it's clear. So let me make my face smaller again. Okay, yeah, I'm there. I'm in the corner there. I like the little small face there. Yeah. Okay, I'm down at the bottom, guys. You can see I'm down at the bottom. You can see me. You can hear my voice. It's just that the PPT has got a lot of information, so I decided to make it bigger. The font might not be bigger, so I would rather make my face smaller. Okay, let's go. More inform your DP about any change in your personal information, such as address, bank account. Okay, all this stuff. We've talked about it earlier. But let's just let's just run through it. Okay, let me go back. Okay, inform your DP about any change. What's going on here? Okay, let's go back. It's my PPT is playing on its own, so I am shocked. Okay, let's go back to our slide. We were here. Exactly. I was reading this part. Inform your DP about any change in your personal information, such as your address, bank account. Immediately, always mention your mobile number and email ID in account opening form and keep them updated. Some of this stuff is self-explanatory. Publications and presentations are available in English and any language. It depends on in the country that you're investing in. If you're investing in France, obviously the information is going to be in French. If you're investing in English-speaking countries, the information will be available in English or in your native language. Okay, it might be also available in your native language. If you're in Germany, it's going to be available in Germany, but usually all the languages, it doesn't matter. All this information will be available in many different languages. Schedule of awareness programs, registration, feedback facilities available. We have a website for that. Never deal with any unregistered or unauthorized market intermediary. This is important because, you know, investment, there are a lot of criminals. So people, you should do your homework, who you're dealing with. Are they registered with a proper regulator? Do you know about their credentials? Know about their track record, their history? Do they have a track record? Did they have a history? Are they? These are things that a prudent investor must know. Okay, these are don'ts, right? We're not talking about the don'ts. We talked about the do's. These are the don'ts. Never deal with any unregistered or unauthorized market intermediary because they might lead you to a loss. Check on the SEBI's website that your stock or broker, authorized person, mutual fund distributor, investment advisor are registered with whatever board that regulates stocks or middlemen. Okay, so it's important for you to know all this information so that you do not get scammed. Okay, the scammer them there. Scammers are everywhere. Okay, so do not act on unsolicited SMS. So this is more like cyber crime. It's prevalent not only for stock holders or investors. Cyber crime is everywhere, even spam and stuff like that. So do not act on unsolicited SMS emails providing tips, stock recommendations, and assured returns, etc. Yeah. So there's a lot of this is an important point. There's a lot of information on stocks. So there's a lot of content creators about stocks investment, and I am one of them. And I'm not saying that I'm professional. This is actually just a tutorial to help you guys. I'm not saying I'm a guru or I know everything over here. But over here, we just do this live stream to challenge you to be an investor, to be a wise investor, to say, hey, man, you're missing out. Hey, ma'am, you're missing out on certain opportunities that you're supposed to be getting while you're still young. Okay. Try to invest. Okay. We're not saying invest. Okay. Well, our motivation is to make you understand, or for your mind to be opened to the world of investing, so that you can involve or include investing as part of your wealth creation plan. Okay, not everybody's got a good job. Okay, but I'm sure if you have a good job or an average job that pays well or pays moderately, then you want to be able to invest. So here is just an education platform. Notice we're not giving any investment tips. We're not saying, oh, go and buy stocks like this, stocks like that. I'm not an expert in that field. I'm just an expert in telling you that you should try to invest. Okay, go for these asset classes or have a diversified portfolio, things of that nature. So do not what. So we also have to be careful. Stock tips, stock recommendations. So you see, we're not recommending you to go to any stock trader or anything like that. We're just neutral. We're just talking about investment in a neutral tone, in a neutral way. I never invest with borrowed money. Avoid unnecessary loans and credit. Yes, that is really important. Okay, never invest with what? With borrowed money. It's wise to always invest with your own money. Okay, those are some important points there. Financial Kaleidoscope, free month newsletter. It's available in English and any other language. Okay, so we're here to what? To educate you. Give me a second here. Let's go. Uh-huh. These are some of the places you can go, and these are just contacts or places you can get your queries or your grievances attended to. So you see like that. Okay, so now we are now there. Asset classes. The lesson was supposed to be about asset classes, really. Let's go. Okay, so why do we invest? We spoke about this at length. I think I'm getting even tired of talking about why do we invest. But for the people that were not here, we just have to tell you guys. Um, so we shouldn't get tired, right? So yeah, investment is necessary to support your financial needs. So investment is just about financial needs. There has to be benefits. The benefits are what motivates you to be an investor. So investment is necessary to support your financial needs when you do not earn money. Okay, when you do not earn money, when you're out of a job, when you're retired, or whenever you're in any position that you cannot earn money, your investment is there to give you back up. Okay. So if you invest a portion of your income, not all of your income, our income levels are different. Invest a portion of your income, okay? You allow money to grow and work for you, okay? So that's just basics we've been talking about. Parameters to assess suitably for an investment are what? Return potential, safety, and liquidity, okay? Return potential, safety, we can also break it down as risks and liquidity. So these are three areas that you should monitor. Various avenues where money can be invested, okay? So these are our asset classes. What avenue should I take? Okay. Um, we know for a fact stocks are the most common asset class, but other asset classes as well are, you can get wealth out of them, but stocks are the number one. Okay. So there are various avenues where money can be invested are broadly classified into some groups known as asset classes or investment vehicles. Stocks or equity shares are the most popular class of assets, like I did say. Yes, a lot of people, even people who are not investors, they just know of the word stocks. They've heard it somewhere. Okay, you rarely, if you ask a random person stock, they can say, "Oh, investment." Oh, I know about stocks, ownership in a company. Okay, they're not really familiar with the others like bonds, unless if you're somebody who studied. Unless if you're somebody who's taken finance or who studied finance. Okay, so this is the reality. What is meant by asset class? What does asset class mean? Anyone wants to take this? Do you understand asset class? There we go. An asset class is a group of different financial assets or investment vehicles. Okay, asset classes. So stocks are an asset class, and also bonds are an asset class, and also we have what mutual funds are an asset class as well. Okay, so there you go. Uh, so asset classes with the main one, the most common one being what? Being stocks. So an asset class is a group of different financial assets, okay, or instruments which have some common ground in terms of safety, returns, and liquidity. Typically, various investment avenues under one asset class respond similarly to market conditions. Historically, asset classes have shown significantly different performance in different market conditions. Okay, so yep, we've got different markets, and the market has conditions. Okay, so what you need to expect is that your asset class is going to behave differently in different markets because different markets have got different what conditions. Okay, now let's move on. Therefore, it pays to allocate different amounts to different asset classes. Okay, it pays. Okay, so you got to have your investment in different asset classes. This process of allocating or investing some amount to different financial assets or financial instruments is called asset allocation. Okay, so there we go. Types of asset classes. Let's move on to that and see what are the types of asset classes. So there you see, guys, we've got a little graphic there. We've got fixed income. It can also be an asset class. Real estate is an asset class. Gold or commodities. Gold commodities, we're now talking about your oils, your minerals like gold, like silver, platinum, uranium, whatever. We also talk about your oil there. So, and then also we're going to talk about equity. Okay, equity, we're now talking about things like your securities. Equity, we're talking about securities. These are your stocks, these are your bonds, these are your mutual funds. They go by a number of names. You can call them equity, you can call them securities, but generally you've got stocks, bonds, mutual funds. You also have ETFs in there as well. And then we also have the last one is cash and cash equivalents. Okay, so these are the types of asset classes that are there. Okay, real estate obviously stands on its own. So, so all these are asset classes. All these are investment vehicles. All these are companies that are doing business, just specializing in these different asset classes. Okay, let's move on to the next one. So you can see it's self-explanatory. It's not a lot of a lot to ponder about there. So let's see if there is a breakdown of these. Okay, how to decide asset allocation. So this is a classical question. How do we decide asset allocation? Okay, there you go. So we got some questions. Which are the appropriate asset classes for one investor? So you should know what. So we've got those five, right? Which one is an appropriate asset class for you as an investor? Are you going to venture into commodities like gold? Are you going to go for real estate? Are you going to go for equities or just fixed income? So these are important questions that an investor should know before they choose an asset class, okay? So, but we do know that stocks are the most common asset class, okay? So which are the appropriate asset classes for one investor? Okay, one investor. So asset classes will differ from investor to investor. Some investors are aggressive, some are moderate, some are conservative. Okay, um, so uh, so it depends on what type of investor you are. Are you more traditional, conservative? Are you moderate? Are you willing to split it between different asset classes, or you're aggressive? You're somebody who wants to invest in all asset classes. How much money one should invest in one particular asset class as well? Yes. How much money? So asset classes also, this is what we call you're diversifying your portfolio. So this is what how much money one should invest in one particular asset class. So you can opt for all asset classes. You're just diversifying your portfolio. You do not only want your investment to be in stocks and other equities. You want your investment to also be in real estate. You want your investment to be tied to commodities. So you are what? You're spreading risk, so that if real estate gets targeted, there's no way commodities are going to be targeted at the same time. Uh, um, Real estate is going to be targeted. Okay, so if there is a fluctuation, if there is a problem, or if the market doesn't perform well in real estate, at least you still have got gold, you still have got equities, you still have other securities. Okay. So there you go. How much money one should invest in one particular financial asset or instrument? Okay, so all of these are questions that are should be asked. Okay, that if when you are ready, when you are mature, when you have enough information and education on investment, these are some of the questions that you should ask yourself before you even start investing. So it's very important. There are no standard answers for the above questions. Okay, there is no standard. Asset mix varies from person to person. Okay, so there is no really answer to all these questions. Okay, asset mix varies from person to person. Okay, so one person might want equity, one person together with commodities, together with real estate. Another person might just want equity alone. Another person might just opt for commodities and equity. It depends on the person, what you're trying to achieve, which is a product of your goals, which is also a product of your objectives, what you're trying to accomplish, what you're trying to achieve by investing. So it is um, based solely on your motivations and your understanding. Even for one person, asset mix is not constant, varies over time. Okay, let's move on. Factors affecting asset allocation. Okay, so we're gonna go there. Welcome, guys. Kindly give us a sub. Welcome to the live broadcast right now. Anyone knows about this? Okay, let's go. So in real life, so we've got three arrows there. We've got time horizon, risk tolerance, risk versus rewards, and tax saving. Okay, there you go. Factors affecting asset location. In real life, there are many assets which cannot be fit into a single asset class, meaning they are hybrid assets. Okay, we have hybrid assets. There we go. A basic approach to asset class selection. Okay, we got that chart there. Got a lovely chart there with a lot of information. We got different people. We split it into different people. We have students, we have salary earners, private salary earners, governments, professionals, traders, housewives, retired persons. It's just a graphic that I came up with. And then obviously on the side, you're going to notice that those key factors. Okay, and then we've got those symbols like VI, and which means very important, and I means important, and LI means less important. Okay, so returns are across the board are important for everyone. They're either very important or important. Okay, returns. So yes, when we invest, we want some returns. Doesn't matter you're a student, doesn't matter you're a housewife, doesn't matter you are a retired person. Okay, it doesn't matter you work in the government, doesn't matter you work privately, doesn't matter whatever profession you're involved in, whether you're a technocrat or anything. Returns across the board are important for everyone. Okay, so very important. Why? For students, you want to pay back loans. You're a student, you want to pay back student loans. Okay, salary earners are private, maybe you're self-employed. It's you who want to retire, you want some nice returns coming your way. So across the board, liquidity. Liquidity. This is when a company maybe fails and shuts down. So people are saying important, 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 important. Some people feel like this is less important. Okay, and then safety is the other one. How safe is your investment? Uh, how safe is your investment? This is obviously determined by the company, the track record, and the history of the company. There's no way we want to establish our investment in a company that is questionable. So, yep, it's important for students, salary earners, for governments. It's really governments and companies, it's really important. It's very important. Professionals, it's important. Traders, important. Housewives, very important. And retired persons. Okay. Uh, so you can see with retired persons and housewives, safety is important. Yeah, because you've retired, right? You no longer have any you can no longer work, you cannot get a regular income. So the safety of your investment is really important. Okay, so obviously it has to be very important for you. Likewise, also uh, women who raise children at home, obviously that is safe, and investment is safe because naturally women are doing everything for their children. Okay, that is just who women are, that is their nature. Women will do anything for their children. Okay, so obviously the safety of an investment will be very important to maybe a woman who is a housewife, even a woman who goes to work. Okay, because she's doing all this for her children. Okay, tax savings. Okay, tax savings to save on tax. If maybe for students it's less important, but for every other person, and also housewives and retired persons, savings on tax is not important, but for the other people is important. So it's not the case that all salaried persons should have similar asset mix. Even same salaried persons will need to reconfigure his or her portfolio with advancing age, changes in family composition. So there are a lot of factors that make people choose an asset mix or an asset class. And over time, depending on your understanding, depending on your family dynamics, as you advance in age, obviously you will alter your requirements, or you can go for a aggressive mix, or you can stay moderate, or you can always be conservative. It depends. There are a lot of factors. This is just a simple breakdown. Make sure that you give us a sub. Okay, let's move on to the importance of uh, diversity in your portfolio. We did speak about this, so you can actually see there is an image there of somebody putting money in three baskets. Okay, so these are different asset classes. This is somebody who is investing in different industries, in different markets, in different asset classes. Okay, and investment. So that is what importance of diversifying your portfolio. This just means investing in different asset classes. What is the importance of that? An investment portfolio means combination of various financial assets belonging to different asset classes. So investment portfolio just simply means it's a combination, okay? Financial assets belonging to different asset classes. So different asset classes are trading or investing in commodities, investing in real estate, investing in securities or equities. It can also be diversification, can also be investing in different sectors, in different industries. You can also, diversification can also mean investing in different markets. Okay? You can still have one asset class, but you can invest in different markets. You can still choose to invest maybe in mutual funds, okay? But you can invest in the Indian mutual fund trust, okay? Or you can invest, you can have another one in London, you can have another one in Toronto, Canada. You can have another one in Cape Town, South Africa. All these are mutual funds, but they are not in one market. Okay, there you can have one in Rio in Brazil. Okay, so you can have one asset, but you can be investing in different markets because all these markets are different. Okay, the way markets behave in 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 India is different from the way markets behave in Germany. The way markets behave in Germany is different from the way markets behave in Argentina. The way markets behave in Argentina might be different from the way markets behave in Nigeria. So you might just be like, you know what, I'm comfortable. I know mutual funds. I'm not comfortable with stocks. I'm not comfortable with bonds. I know mutual funds, but I don't want to my mutual fund to be in one market. So you can actually what spread it across. Okay. So that is just what diversification means. So you can diversify across asset classes, you can diversify across markets, you can also diversify across sectors. Okay, sectors. Sectors definitely mean um, um, engineering. Okay, engineering, mining. You can also be in IT technology. So this is like spreading your risk across. Okay, a well diversified portfolio reduces the overall risk. So what is the advantage of diversifying? We're trying to spread risk. Okay, we're trying to spread risk. Okay, we're not trying to have our eggs in one basket. We're trying to spread the risk so that if, for an example, something bad happens in one sector or in one asset class or in one market, we have our investment spread across different other markets. So we may record a loss in one department or in one asset class or in one market or in one sector, but then because we invested in other sectors, we are not really going to feel that much of an impact, okay? But it's different if we have our investment in one pot of gold. When push comes to shove, when markets crash, then definitely we're going to feel the push. We're going to incur the loss because all of our investment is tied at one place. So we have to spread out the risk. Okay. It ensures that portfolio performance is not affected by poor performance of any single asset class. Okay, that's self-explanatory. Okay, that's self-explanatory. So now let's go to the next slide. Okay, so we're talking about asset classes. There go some important asset classes. So we're going to talk about the pros and cons of that one there. So we got what? Fixed income, typically a fixed return attached. So this is just fixed income. This is just money that is fixed. Time horizon is predefined. Generally, example, bank deposits, the deposits that you do at the bank, government securities, corporate debentures, or bonds. Okay. Relatively what? Low risk. Low risk category can be easily liquidated, typically yield low returns, offers little or no tax savings. So that is what fixed income can do for you. So if you're somebody who wants to invest in fixed income, it's important you know the pros and the cons. Okay, pros and cons. Let's move on to the next one. This is equity. Equity, like we did say, these are your securities, these are your bonds, these are your stocks, these are your mutual funds. Okay, that is what we call equity. Equity offers typically high but uncertain returns. Okay, so equity, all equity or most equity, high but uncertain. Okay, so you do have to do your homework. Examples: equity shares, equity mutual funds, equity bonds. Okay. Pros: relatively low risk category, can be easily liquidated. If a company, you can liquidation simply means you can easily turn it into cash. Typically yield low returns, maybe it's over time. So with equity, you are investing over time. You're not looking at getting returns immediately. Okay, so if you buy stock in a company, you're gonna hold on to that stock, okay, for a while, okay, in the hope that that stock that you bought, that ownership stake that you have in a company, is gonna what? Is gonna appreciate in value over time. Okay, this is just it. Okay, yield low returns, and also with equity, you also get a dividend, right? Offers little or no tax savings. Okay, I was supposed to put others there, um, but that's why I'm explaining it to you guys. Um, so let's go right now. The next slide, it's talking about gold. Okay, commodities. Okay, so gold, you can also put in diamonds, you can also put in minerals, commodities, oil there as well. They are part of the same thing. Um, so let's go with gold. So gold, it is the oldest form of holding assets. Almost every government in the world has gold reserves. Okay, it is popular across the world. Even central banks do hold some portion of their reserves in gold. Yes, exactly. We most people know this. Various forms of investment in gold, physical gold, coins, bars, jewelry, digital gold, gold mutual fund, gold ETF, sovereign gold bond. Consistent appreciation in value. Gold is the most precious mineral or commodity there, safe against inflation. Yes, gold is not affected by inflation. Okay. Now the cons are it requires high investment and a long-term commitment. Yeah, gold, you gotta pump out a lot of money and long-term commitment as well. Liquidation such assets can be time-consuming and lost in value. Okay. Cash earners. Let's see what it says about cash earners as well. Do we have somebody? Somebody liked. Thank you for the like as well. Who liked right now? Okay, somebody just gave us a like. Thank you for that. Now let's see. Where am I? Oh, we are still on cash. Okay, cash as an asset class. Let's go there. Now we're on cash. Okay, cash. So if you get cash, your cash earners typically the lowest returns, yet essential component of a portfolio. A thumb rule: keep 3 to 6 times of your monthly expenses in cash or cash-like assets as emergency funds. Examples of cash: hard cash or bank balance, that is the money that is in your bank, it can be considered cash, okay? Foreign exchanges, we're not talking about currencies, okay? You can also have your money in another currency elsewhere. Flexible fixed deposits, liquid mutual funds. It is fully liquid by default because it's cash, it's already liquid, okay? We did talk about liquidity is turning an asset into cash. Cash, it's already liquid, it's already cash. Cash is liquid, liquid is cash. It is fully liquid by default, okay? The safest way to protect value against external factors, okay? Just holding on to cash. Risk of theft, if held physically, is inflation as well. Cash is subject to inflation. Inflation, yes, that basically means the buying power goes down, okay? Okay. Least appreciation in value. Just having money as cash, chances of it appreciating in value. That's why we encourage people to invest. Okay. Just having holding money in value is not advised. Okay. Okay. Returns will almost always be less than inflation. Exactly. So this is how. So we have some characteristics there. I'm not going to spend a lot of my time on that. Those are the characteristics that we have there. Such a lovely graphic. Financial assets, characteristics of financial assets. There you go, financial assets or instruments. So we have all those listed down there: government bonds, treasury bills, national savings certificates, fixed deposits. Just had to make it a lot bigger, a lot more structured. But of course, some of this stuff may not have meaning to a lot of people, but I just had to come out with the full scoop and put everything there. So you can really see there mutual funds, corporate bonds, corporate fixed deposits, direct investment in equity, collective investment. So you can see returns, liquidity, safety. Okay, how safe it is: government bonds, high, safety is high, medium, returns, low. Who has high returns? Let's see who has high returns. Investment in equity has high returns, and also the last category has high returns as well. Um, and low, 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 low. So it's just a breakdown, right? It's just a breakdown. Okay, now let's see what else. Who's next? We are left with 3 slides, and when we finish, we are what? We are going to the next. Okay, let's go right now. Okay, so remember, always remember your financial goals and investment time frame. Review your financial goals periodically, at least once in 5 years. Okay, so interesting graphic over there. Always remember your financial goals and investment time frame. If you can frame it, if you can have it documented somewhere, what your financial goals are, or yes, it's important. Let's get it right now. Review your financial goals periodically, at least once in 5 years. Risk and return profile of various assets are not constant. Consider taking help from a registered and qualified investment advisor. Yeah, that is important as well. Okay, let's see. So that is remembrance, investing money. I have a quote at the end. It says what? Investing money is what? Investing money is the process of committing resources in a strategic way to accomplish a specific objective. So investment, guys, you are in the process of, it's a long process. You have to be patient. Okay, it's strategic, it's well informed, and it's something that happens over time. Okay, it's not instant, it happens over time. Let's get it right now. So there we go, guys. We just finished our live broadcast. Okay, I hope you guys will see you another day. Thank you for your likes, even though it's one. Thank you for your support. We will end the live broadcast. It will be there on my YouTube. So if you want the PPT, just write in the comments that you want the PPT. I will find a way to, maybe I will pin it on my YouTube so that you guys can get access if you are interested in this. Okay. So let's get it. Let's go. See you guys until next time. Smart investing. We're out of here. Let's go make money. See you guys.